How's it going, everyone? It's Sam. Today we have a doozy of a video. I have a lot of people in my family or friends that have said, I try to watch your videos, but I'm just kind of lost. I'm not at the spot you're at. So today we're going to go through from a beginner's perspective, looking at cryptocurrency, asking really important questions like, first of all, what the heck is Bitcoin? What's cryptocurrency? Should I buy? When should I buy? How should I buy? Where should I put it? Going through whether you should be buying cryptocurrencies that are lower in price or higher in price, and all the common questions that you'll have as you get invested into cryptocurrency. So today we are going through a beginner's guide to crypto. And this is also really cool. I had someone recently comment on one of my videos saying that they bought their first $50 of Bitcoin and they had some questions. So I think videos like this help the people that are new into crypto, and even if you aren't new to crypto, even if you've been around a while, I'm sure that you'll probably learn something that you haven't learned before, or it might just be useful to remind you some of the key foundations of cryptocurrency and Bitcoin, what they are, what you have to do during the bull market, and that kind of stuff. Now, I'm going to go through a lot of different questions in today's video, a lot of different topics, and this isn't the most rigid format. I'm not trying to give you a PowerPoint presentation, right? I want it to be more like we're just having a chat and you're asking me these questions. Now, whatever questions I don't answer, if there's some burning question you have in your mind, put in the comment section. Maybe I'll do a follow-up to this and answer some more questions. But if you don't mind, before we get started, hit the subscribe button underneath the video. One of the keys to cryptocurrency is understanding crypto, getting news, understanding what different cryptocurrencies do and how price action happens, why the price goes up, why it goes down, and we talk about that a lot on the channel. So hit subscribe. Turn on that little bell icon right next to the subscribe button so you can see future videos just like this one. As soon as I make them, it gives you a notification. There are also going to be some links underneath the video. I'm going to talk about a few different things that I use in the video. So if you want to check them out, you can underneath. Now, first of all, I think the number one question is, what is Bitcoin? Now, to be clear, in this video, I'm giving you an idea of my thoughts on a lot of different subjects. I'm not going to go super in depth, right? I could probably make a full video on every single one of these questions that I'm going to be going over, but I don't have enough time. I sometimes make those videos, but this is just going to give you like your building blocks of what you need to know. You're going to have to do more research after this. Just a quick disclaimer, and know that I'm not a financial advisor either, right? There is risk in investing. So what is Bitcoin? Bitcoin was introduced in 2008 by an anonymous creator known as Satoshi Nakamoto. It is decentralized digital currency exchanged through a peer-to-peer network without centralized authorities. Let's break that down. That's a lot. So this was created by a person or persons called Satoshi Nakamoto. We don't know who they are. They are secret at this point, and probably for good reason. They hold a lot of Bitcoin. There could be danger if people found out who they were. There are a lot of people that like Bitcoin. There are a lot of people that don't like it because it threatens what they are already doing. It's decentralized, meaning there's no single authority that controls it. No one can go change the code, as much as some people think that's the case. There's no one that can change the code. It's open. It's code that you can go look at. You can read it. There are tons of, millions of coders that have looked at the Bitcoin code. It's decentralized as in, like, you don't need an approval from a bank to go send your cryptocurrency. There's no one point of failure. So if all of a sudden, America goes without power, it's not like Bitcoin's going to shut down. It's a digital currency, meaning you can send it via the internet through your phone. You can send it without having to have any kind of physical asset. You don't need to hold it in your hands physically to send it somewhere. And it's a peer-to-peer network. You can send it to other people without centralized authorities, as I said. Now, one of the things that I think people have a hard time understanding is, one, what's the utility of Bitcoin? Like, what does it actually do? And then why does it have value? So the things that it does, it actually sends value within seconds across the world. I think that's one of the most valuable things about Bitcoin is you can take a Bitcoin and you can send it to someone in China You can do it at any time you want, any day of the week. It doesn't have to be during banking hours. You don't need some authority to approve it, so you could send it whoever you want. It's not like if it's some kind of, it's not like it's going to get flagged by PayPal as a bad transaction and then require more information. It's not like that. So you can send it wherever you want, whenever you want, very quickly. And you can send it pretty cheaply as well. Depending on how you send it, you can send it for a few fractions of a penny. Compare that to like gold. Think about how much it would cost to send a gold bar that weighs, I don't know, 5 pounds across the world. That'd be pretty expensive. It's inefficient too. It takes a long time. And a lot of people will look at characteristics of money when they evaluate maybe a new cryptocurrency or just currency in general. Now, a lot of people don't use Bitcoin as currency. Some people use it to pay their daily bills. A lot of people just save in it, and we'll talk about why that is. But Bitcoin does have a lot of the characteristics of money. It has durability. For example, let's think about a cow. A cow is fairly durable. Like you can't rip a cow by accident or something like that. It's fairly durable, but if you take a long trip, it does run the risk of sickness or death for the cow. Portability, while the cow is difficult to transport and store, the currency, like a physical dollar bill, for example, can be easily put into a pocket. Divisibility, cow isn't very divisible. It's not like for a cup of coffee, you can rip off a little piece of the cow. No. So compare that to a dollar bill. You can easily divide a dollar bill. Uniformity, cows come in many sizes and shapes, and each has a different value compared to a $20 bill. Is a $20 bill is a $20 bill. It doesn't matter. There's a limited supply, right? If there's infinite supply of a dollar or of any asset, then the value goes down, and it has to be acceptable too. So this is interesting. When you start thinking about this in terms of Bitcoin, a Bitcoin is a Bitcoin. You're not gonna have a Bitcoin get sick or rip or anything like that, rot. It's portable. You can send it across the world in a split second compared to even a dollar. Even if you think about like a wire transaction, it takes time. So portability, you have to think about a time component as well, not just distance, but time and distance. Divisibility. Obviously, we can go down to a penny in the U.S. currency. A lot of people don't realize this, but most people don't buy a full Bitcoin. They buy a small amount. You can buy a few dollars worth. Bitcoin can actually be split up into 100 million pieces. They're called sats. One sat is 1/100 millionth of a Bitcoin. So it is very divisible. It's also uniform. A Bitcoin is a Bitcoin, like I said. And unlike the US dollar, there's actually a limited supply, which we'll talk more about later, but there is a limited supply compared to unlimited fiat dollars, or just like dollars that you and I would think about. And while Bitcoin isn't accepted as a point of sale transaction, a lot of places, there are certain ways you can get around that, but most people store their wealth in Bitcoin and then they might go convert it. They might sell a little bit when they need it to be accepted somewhere. They might convert it back to US dollars just to spend. It runs on the blockchain. So blockchain technology is an advanced database mechanism that allows transparent information sharing within a business network. It stores data in blocks that are linked together by a chain. So a lot of people hear about blockchain but don't really know what it is. It's just a way of showing data openly to anyone that wants to see it. So that can be pretty useful as well if you want to show like what's actually happening behind the scenes. It's not private, right? And another reason a lot of people like it is just that it appreciates in value. Bitcoin becomes more valuable over time. You can see like what one Bitcoin paid for back in 2012, just like a small thing from the grocery store, something small, I don't know, a few dollars. Then in 2013, the price of Bitcoin went way up. You could buy like a whole cart full of food. 2014, it could buy even more food. And then in 2021, you can buy a car with it. Now you could buy a car with it. You could put a down payment on a house compared to like $20. It used to be able to pay for a lot of food. Then it paid for a medium amount of food. Now it pays for barely anything. You can buy like 3 or 4 items at the grocery store for $20. And that is one of the reasons people like Bitcoin. And the reason it appreciates, this is one of the big factors about Bitcoin that people like. The reason it appreciates in value is because there's only a limited supply of Bitcoin. There are only ever going to be 21 million Bitcoin. And the amount of Bitcoin that continuously come to the market, so the amount of Bitcoin right now are less than 21 million. There are some that are going to be mined, which we'll talk more about that later. But there are less than 21 million Bitcoin. And every 4 years, there's something called a Bitcoin halving event. It's just where the new issuance of Bitcoin gets cut in half. So over time, think about it if you're mining gold, right? As time goes on, there's more and more gold that's mined. So there's more supply of gold on Earth. So if the amount of gold goes in doubles, well, the price of gold would go down. Just supply and demand, right? So if there's more supply and there's the same amount of demand, the price of a product goes down. Now, every 4 years in Bitcoin, the amount of Bitcoin being mined, again, think about like gold. So the amount of new Bitcoin gets cut in half. So there's less and less new Bitcoin every 4 years, which means that it's harder and harder to get your hands on new Bitcoin. And there are a lot of people that are trying to buy Bitcoin as well. It becomes more and more popular every couple of years. More and more people buy Bitcoin, which means that there's just less to go around, which makes the price go up. This is the only asset that after it goes up in value, there can't be made more of it. Think about it. Like if a company goes and triples in value, let's say they get some new contract, right? You own Tesla stock. Their revenue goes way up. They can issue more shares. Let's say they think that their stock is overvalued. They're not worth as much as they're actually being valued by the market. They can go and say, hey, we're gonna issue some more shares so that way we have more cash on hand so that we can spend more money in our businesses, which means that your ownership, let's say you owned 1,000 shares of Tesla and they go issue more stock, they just sell it to new people. Your ownership in the company actually goes down. Even though you never sold any of your stock, the amount of the company that you own actually went down during that purchase or during that sell of the new shares. Bitcoin doesn't have that. Same thing with real estate. If some area becomes really expensive, let's say Miami, right? As Miami's property value went up, or as their real estate market became more valuable, there are more and more houses being built. There are a bunch of condos and high rises. So you can always build more property or more houses. But with Bitcoin, there's only ever going to be 21 million Bitcoin. So it is very scarce and there's not much coming to the market. And compare that to something like the US dollar, right? The reason that we continue to see the amount that you can buy going down, like over time, is due to deflation or inflation, which is basically what we all know. Things become more expensive over time. And the reason for that is because the money supply grows over time. The US and other countries continue to issue more and more money, which makes money less valuable. So that's why people like Bitcoin. That's one of the reasons. You can send it across the world very quickly. It's a better money than money in a lot of ways. And it's not being devalued by government entities, right? It is what it is. And no matter how high the price goes, there's not going to be more Bitcoin made than what's already set to be made. So that is how Bitcoin works. That's why a lot of people like Bitcoin. And I realize I talked about Bitcoin a lot. I like Bitcoin a lot. It is different than cryptocurrency in my mind. Cryptocurrency is a much broader subject than just Bitcoin. Bitcoin is cryptocurrency, but cryptocurrency isn't necessarily Bitcoin. Cryptocurrency is anything that's on a blockchain, some kind of, well, I guess I shouldn't say anything, but cryptocurrencies run on a blockchain. So if you look here, all these different names are cryptocurrencies. There are thousands and thousands and thousands of cryptocurrencies out there. You can learn about a new cryptocurrency every day for the rest of your life because they can be made within a few minutes. They're very quick to be made. Now, you might be saying, well, how do I know what a cryptocurrency is? Well, you have to do your research on it. Like Ethereum is very different from Bitcoin. If you lump these into the same category, it would be like saying that Google and Amazon are like the same business. That's not true. They both use the internet. They're both technology companies, but they don't do the same things. Now, some of the things may overlap, like they might be in the same sectors of business, but what they do is vastly different. So that's very similar to Bitcoin versus other cryptocurrencies as well. Bitcoin was the first cryptocurrency and is the safest. It's the largest cryptocurrency, and it's really in a different class compared to all the other cryptocurrencies. And you might be saying, okay, well, how should I invest, or why would I even want to invest in Bitcoin when I can invest in things like real estate or stocks? Generally, Bitcoin has performed much better than real estate or stocks. If you look at the new home price priced in Bitcoin, so instead of pricing in US dollars, you look at it in Bitcoin. We know that real estate has gone up in price a lot. I think a lot of us have had to buy houses over the last 5 or 10 years, and we can't believe the prices that we have to pay compared to what maybe our parents paid or some sibling that bought a house before us. If you look at the price of new houses in Bitcoin back in 2011, you would have had to pay about 64,000 Bitcoin in the US to buy a new house. Then let's look 5 years later, you'd have to pay about 500. So instead of 64,000 Bitcoin, you had to pay about 500 Bitcoin. So 100 times less. Now, to buy a new house with Bitcoin, you'd have to pay about 8.34 Bitcoin. That's over $400,000. But you can just see, like, even assets that appreciate a lot, that get more expensive, like real estate, they still go down in value versus Bitcoin, which is a way to think about it. If you want to know how much Bitcoin has gone up in value, you can price it in terms of other assets, not just the US dollar, but other assets like real estate. So that's a really interesting way of looking at Bitcoin and the value of Bitcoin. So let me go through this list. I'm just making sure that I cover some of these important points. So we covered what is Bitcoin. We covered what is cryptocurrency. I think it is important to talk about where you can learn more about cryptocurrencies before we continue on to like whether you should buy, when you should buy, how you should buy, all that kind of stuff. So how do you learn more? One, watch YouTube videos like this one. Go out and be curious, type different things into YouTube, search Google. I think YouTube and Twitter are two of the best sources of information and news out there. So find people that you really like to watch that are grounded. One person that I had on the channel recently, Digital Asset News, has a very level-headed approach. So if you want to go check him out, search for him up in the search bar up there. He's a great guy to watch. We should also look at CoinMarketCap or CoinGecko. Those are just different websites that show the prices of cryptocurrencies, and you can go and click on any of these cryptocurrencies and it will show you a price chart. It's actually a little bit slow because I have so many tabs pulled up, but it will show you a price chart of the cryptocurrency. You can look at it at different time frames. So you can look at it over the last day or over the last week, over the last month, see what it costs. You can see what kind of exchanges it trades on. You can see information such as the market cap, and we'll talk more about what all this stuff means later. And then you can go down here and it tells you what Solana is, for example, or whatever the cryptocurrency is, who are the founders, what makes it unique, all that kind of stuff. So this can be really helpful too for beginners. Let's move on and talk about, should you buy cryptocurrency? A lot of this will be based on your own risk tolerance and how well you can handle volatility, like emotionally. How well can you deal with the numbers going up and down? Another part of it is your time horizon. If you're looking at a couple weeks, this probably isn't the right asset class for you because you could be down a lot in a few weeks. But over time, if you zoom out enough, if you look at a long enough time horizon, multiple years, this is typically the best area to invest in. Some people don't like it. You can see here, crypto is risky for a lot of reasons, but the big reason is it's not a safe investment because it can have huge swings in price in the blink of an eye. This is coming from Dave Ramsey. He's someone that doesn't like cryptocurrency. He thinks it's all fake. He thinks it doesn't hold any value. There are going to be people that think like this, and then there are going to be people that think it has a lot of value. And it's totally okay that there are some people that don't like cryptocurrency. Like in any kind of asset, there are people that think that it's a good value and people that think it's a bad value. I've noticed the more that there's like a huge opposition to a stock or a crypto, usually the more upside it has and also the more volatility. There are people that actively bet against it, that are pushing down the price. But then there are also people that love it, that are diehards, that think it is the best asset to hold. And it's fine if there are two opposing views. The key is for you to put in enough time and research to understand it, understand the benefits or the pros and the cons, and realize too that if there are people that are opposed to it, there's still probably some upside left. If everyone thinks that something's a great investment, well, then the price usually goes up. It's more expensive to buy because you have a lot more buyers. So keep that in mind. So there are always going to be people that try to scare you out of buying cryptocurrency. Even some people that like cryptocurrency or Bitcoin are going to tell you to sell because they want to incite some fear, because then they can go buy your Bitcoin. As you're selling it, they can buy your Bitcoin. There are other people, the opposite of Dave Ramsey, that think Bitcoin's going to go up to $600,000 a coin. They think that, we're at $50,000 now. They think it's going to go up 12x in the next couple of years, which is a huge return. That's much better than traditional markets. And to be clear, you don't have to buy a full Bitcoin. Like right now, Bitcoin's at $50,000. You don't have to go buy a full Bitcoin. You can buy $5, $10. There are a lot of places that you can buy, and all of them allow fractional buys of Bitcoin. You can tell them how much you want to buy. So don't be freaked out by seeing a $50,000 Bitcoin. It's not like a t-shirt where you have to buy the full t-shirt. It's not the same. Okay, and then one of the most common questions I get is, I only have XYZ amount to invest. I have $5, I have $5,000, I have $50,000. Is it even worth buying cryptocurrency? Should I buy or should I wait? And honestly, no matter where you're at, it always makes sense to start investing. You can start with $5, $15, $10, $5,000. Everyone's situation is very different. For some people, $1 million is like literally nothing. They blow through it in a weekend. For some people, they will never, ever reach $1 million. So it's all dependent on you, but I always think it makes sense to invest because you have to start somewhere. You could be making $1,000 a month right now, and then all of a sudden you start your own business or you get a new job and you make 5 times that. In which case, it would have been really good to understand how the markets work and also understand your own emotions. Now, if you start with $5, you're not going to become a millionaire, most likely in crypto. Like we all hear stories about so-and-so, they invested $800 and now they're worth $2.1 billion. Those are the exceptions. That doesn't happen very often, and I wouldn't bank on that happening. That being said, if you have a couple $100 and you invest it into some cryptocurrency and it does a 20x, that is still a really good return. Like, don't get caught up in trying to hit a specific number and that determines how you invest in crypto. Like if you're starting with $1,000, don't go out there making it your goal to make $1 million through cryptocurrency in the next year, because you'll make stupid decisions. Now, maybe that's a good goal to have. Like I wanted to become a millionaire when I was younger, and it was a good goal because it made me work harder, but I also just made a lot more money over time. That is where you also need to put some of your time and effort. Like if you have $10 to invest, right? It doesn't really make sense to put in 1,000 hours researching to get 100% return or 200% return. Like you make $10 or $20. You could have spent that 1,000 hours actually just working minimum wage and make $10,000. So there is a limit really to how it makes sense to spend your time and your effort. But I do think if you can learn more about crypto and the markets, in addition to what you're already doing to make more money, that can really help guide your investing journey, and that can really help you in the long term. And I know some people have heard recently about ETFs, the Bitcoin ETFs. Maybe you've heard about them being approved or something like that. If you're curious what an ETF is, it's just an exchange traded fund. It's a type of investment product that holds an underlying asset. So you can go buy in your brokerage account or in your stock account, you can go buy these Bitcoin ETFs and they will go buy Bitcoin. That's basically what it does. So you put in $100, they go buy $100 of Bitcoin. You own the ETF and they own Bitcoin. That's how it works. Now, recently, spot ETFs were approved, which basically means that, like I just said, they go and buy the Bitcoin right when you buy or a few days after you buy the stock. Before you could buy and then they didn't necessarily have to buy the Bitcoin right when you bought. So it didn't match the price of Bitcoin. So if Bitcoin went up 10%, the ETFs didn't necessarily go up 10%. It was kind of a weird thing. So they got this approved, which is really good because as people buy these ETFs, if they want to buy and have some allocation to Bitcoin, if they want to have some of these ETF shares, the ETF has to go buy the Bitcoin, which causes the price of Bitcoin to go up. So that's a little explainer about that. And just to be clear, like another reason why you might want to buy Bitcoin, like I said before, it just goes up in general. Sorry, I'm covering some of the questions that I didn't hit exactly, but like when you think about should I buy Bitcoin, make sure that you understand the risk. Make sure you put in money that you can afford to risk, right? There's a chance that if you buy the wrong cryptocurrency, it can go down significantly or down to zero. We've had that in the past. So just know your own risk tolerance. There's significant upside, but there's also significant downside depending on when you buy and what you buy. But typically, investing in cryptocurrency has done quite well. So let's move on to the next thing. When should you buy? Like that's great to talk about what you should buy, but should you buy now? Well, to be clear, there are a lot of institutions that are buying. Like a lot of big companies are buying. BlackRock, you might have heard of them, you might not. They're the largest money manager in the world. They have about $9 trillion in assets under management, which means that there are a lot of people that invest through BlackRock. It's not like they own $9 trillion worth of stocks and stuff. They allow their investors to buy through them. And Fidelity also is one of the ETF issuers too. There are about 9 new companies that have Bitcoin ETFs, and so far they've been buying a lot of Bitcoin. This is why the price of Bitcoin has gone up recently a lot. This is the daily amount of Bitcoin bought from the ETFs, and this is the days down here, and this is the amount of Bitcoin. So far they've bought over 100,000 Bitcoin. I believe it's actually much more than that now, but they bought a lot of Bitcoin, and this is a different company has been selling some Bitcoin. So overall, Fidelity and BlackRock have bought like 150,000 Bitcoin, which is a lot of money. I mean, that's about, if I'm right on the 150,000 Bitcoin, it might be plus or minus a little bit by the time you watch this, but that's billions and billions of dollars of Bitcoin. Now, that is a very bullish thing. This is why we've seen some bullish price action, but even if they weren't buying, this is typically a pretty good time to be buying Bitcoin and cryptocurrency in general. A lot of your returns in cryptocurrency investing are going to be based on when you buy, because we typically go through something called a 4-year cycle. And down here on this axis, we have time, and then here we have the price of Bitcoin. Typically what we see are these 4 different cycles, or these 4 different time periods, and these happen every 4 years basically. So we have this time period where there's a growth phase in the price of Bitcoin, it goes up, and then we have a bubble territory, meaning it becomes really expensive, like too expensive. It like prices of Bitcoin are just kind of extreme and nuts, and we go up a lot. You can see the gain here, 9,300%. So Bitcoin's price went up like 93x. And then it fell by 87%. So if you had $1,000 in Bitcoin, all of a sudden you have $130 in Bitcoin if you bought at the very top. And then you ride it all the way down. And then we had this crash phase. Then we have this accumulation phase, which is basically where it just kind of bottoms out, goes sideways, maybe goes up a little bit. And then we have this growth phase again, and then a bubble phase where the price goes up a lot. Again, 23x. And then goes down significantly, and this happens every 4 years. We have these cycles where we start it's called a bear market, where the price goes down, a bear market, then we start a kind of accumulation phase, and then we start a bull market every 4 years. Now, we went through a 77% drop back in 2022. Then we went through a pretty big increase in 2023. I believe Bitcoin's price is now up 3x from the bottom, and we're going into this growth phase, and then we're going into the bubble phase where Bitcoin's price is going to go up probably much too fast, and then in a couple of years it'll probably fall down pretty quickly if we go up too fast, because some people start selling, or we have some kind of recession, or we have something else, and that causes the price of Bitcoin to fall down, or just a lot of new people come in and they buy at all-time highs. whales start taking profits, or whales are people that own a lot of cryptocurrency. They start selling and taking some profits. They made a lot of money. They bought, they are up maybe 10x. They put in $1 million. They have $10 million. And then they start selling, and then it causes the price to go down pretty quickly. So the question is now a good time to buy? Like I said, yes, typically it is. You can also see this chart. This is a really interesting chart. I've made a full video on this before, but time goes around in a circle. You can see here, like this is 2013, 2017, 2021, and then 2025 will be when this circle comes around here. And you might need to pause it to understand it, but this shows a lot of information. This is the Bitcoin's price going out, and then time going around in a circle. And really it just shows you when Bitcoin's price hits all-time highs and lows. So typically we have Bitcoin price hitting an all-time high in about 18 to 20 months from now. This is where we've seen the last 3 cycles. We've seen the price peak out right here, and right here. So typically this would be a good time to be selling. And then a good time to be buying is when Bitcoin's price is close to the bottom. You can see bottom, bottom, bottom. This gives a lot of information. So yes, now is a pretty good time to be buying historically. And then you would want to sell most likely in about 16 to 20 months. Now, this doesn't necessarily mean that we are going to have the all-time high right here. Just because it's happened in the past doesn't necessarily mean it's going to happen in the future. But a lot of the time, it's pretty similar what we see. So this is important to know kind of how the cycles work. And you might be saying, okay, how do I buy? Like, should I buy all at one time? Should I buy over time? Should I just, like I said, dump all my money into some cryptocurrency right now? I suggest dollar cost averaging, especially when you're starting to invest in cryptocurrency. Dollar cost averaging is just buying something over time. So let's say you have $1,000 right now that you could put into the market, and then you have like $100 every 2 weeks from your paycheck that you could put into the market. Maybe you want to invest that $100 a week. Just like do that, and then maybe split up that $1,000 into 5 different increments. So you buy like $200 this week, and then $200 a couple weeks from now, and then $200 a couple weeks after that. Now, this takes some psychology out of investing. Like, we could go down 5% or 10%, and if you just put all your money in, you could be pissed off because you just lost some of your money right away. But also the price could do the opposite. It could go up, and then you could have bought at a lower price. This basically is just a way of taking some emotion out of it. And it's going to be it's going to be your decision whether you want to do it over a couple months or a couple weeks, a couple days. There's no perfect way to do it. You can't know the future. Anyone that tells you that they know exactly what's going to happen next is wrong. But this can help decrease your emotions a bit. Okay, so should you just wait for the price to drop, right? A lot of people say, well, I know Bitcoin has gone up a lot recently. I'm just going to wait. I'm just going to wait for Bitcoin to hit 40,000 instead of 52,000 because it always goes down. And that's what people say, but sometimes it doesn't go down, right? There's always a time where you think it's going to go down lower, and then it just goes up, and it never touches the same price again. Honestly, tomorrow, Bitcoin could be at 55,000, and we could never see Bitcoin at 52,000 again. It's impossible to know. So for those people that say that maybe I should just wait for the price to drop, you may be right, but you may miss out on buying at all. Like, if you're waiting for $50,000 Bitcoin, you may never see that. So that's why I suggest dollar cost averaging, because again, you don't have to wait for the price to drop. And even if the price does drop, some people see it dropping and they think, well, it dropped to the price that I was going to buy it at, but it could keep on dropping. And then they get too greedy and then they never buy. Okay, let's move on to the next thing. What causes the price to actually move? Like, what happens? Well, it's all supply and demand. If there are more buyers than sellers, then the price goes up. If there are more sellers than buyers, then the price goes down. So even if you see someone buying Bitcoin, like let's say you hear about someone buying Bitcoin, some new company is buying Bitcoin, and the price goes down, it could just be that someone else sold more than that company is buying. That's basically how it works out. It's very simple. It's the same way that stocks work as well. Even if there's good news, it doesn't necessarily mean the price is going to go up because some people sell the news. That's a big thing too. Like going up to the Bitcoin ETFs, they got approved, the price went up and then it dropped. And then people were like, why is the price dropping? We just got good news. Because some people bought knowing that that news might come out, and then they saw the price go up, and then they started selling because they made some profits. Some people are in it for the short term, some people are in it for the long term. Now, some people also hear about countries banning Bitcoin. Oh, China banned Bitcoin. The US may ban Bitcoin. They're not going to ban Bitcoin. Or even if they do, Bitcoin's going to be fine. Like I said, there are some of the largest financial institutions within the US and across the world that are now buying Bitcoin for their clients. There might be regulation talking about what people should do that own cryptocurrency, but they're never going to ban it. Now, China, it's a different story. Russia, different story. There's still people that own Bitcoin in those countries. They still want Bitcoin because they have oppressive governments. They have governments that overreach, that tell them where they can and can't send money. So a lot of people still own the Bitcoin. It's oftentimes just harder to actually get your hands on the Bitcoin. For every country that bans Bitcoin, there are also countries that own Bitcoin. Like, it's kind of crazy to think about that, but there are countries that literally hold stacks of Bitcoin. The US has 200,000 Bitcoin. China owns almost 2,000 Bitcoin. Even if they say that it's banned, they might own Bitcoin. Germany owns Bitcoin. Ukraine, there are countries mining Bitcoin, all that kind of stuff. So it is kind of crazy how much Bitcoin is actually owned by countries out there. And a lot of it is seized Bitcoin, but this is the Bitcoin that we know they own. They probably own more. So let's talk about where you can buy cryptocurrency. But first, I do want to say that a lot of people have strong emotions when they buy cryptocurrency. Like, it's really hard to set a schedule to dollar cost average into the market. Again, you might set it for every couple of weeks, but then you see the price go up and you're like, maybe I shouldn't buy Bitcoin this week because maybe it'll fall down. This is where a tool can be really helpful. Like, we created HGAlgo. There's a link to this underneath the video. It has a dollar cost average function that tells you when to dollar cost average into the market. And it's been really good. Like, if you look back in 2022, it told you to buy right at the very bottom. It told you to buy right here. It told you to buy here and here and then here. It's not going to be perfect, but it can take some of the emotion out of buying cryptocurrency because it tells you when it's a good time to buy. Now, I'm not saying to only listen to this tool, but it might be a useful tool. I'm using it to help me with some of my buys, and you can turn on the dollar cost average out function too. So it might tell you when a good time to be selling cryptocurrency is. But again, these are just supposed to be like small increments. It's not saying like go double your portfolio every time it says dollar cost average in. And there are some tutorial videos on that link or on that website underneath the video too. If you want to check out HGAlgo, they can kind of give you an idea for how you might want to use this. So moving on to different ways of buying cryptocurrency. So you want to go to an exchange. I have no affiliation with Coinbase right now, but Coinbase is probably a good place to buy for a lot of people. A couple things you want to watch out for are high spreads, which is basically the price that they tell you a cryptocurrency is versus the price it actually is. Sometimes those are off a little bit. So they make money on that spread. They might say that Bitcoin is trading at 52,500, but it's actually like 52,100. So when you buy, they make that extra money. And then also there are some fees as well that goes into it. They have a new advanced trading feature on here that lowers the fees a good amount, but it might be a little bit too advanced for beginners. But after you get your feet wet, after you start buying cryptocurrency, you might want to look at that. Also, if you want to trade cryptocurrency, like if you want to do leverage trading, I'm not saying this is right for beginners, but if you're watching this and you've bought cryptocurrency for a while, you can use leverage, which basically gives you access to more money. And you can do this over on Margex. It's a great platform to use. It's really easy to set up. You don't have to put in any personal information like your social security number or anything like that. You just put in your name, or you put in your password and an email, and then check their terms and conditions, and you can start trading. So this can be pretty helpful if you want to amplify returns. But again, there's more risk in this. And there is a link to Margex underneath the video. You can trade a bunch of different cryptocurrencies there. And with that link underneath, you can get a deposit of up to 20%, whatever you put in there. So if you put in $10,000, you can get $2,000 as a bonus that can be used towards fees for the first couple weeks. So these are two different ways that you can get your hands on cryptocurrency. From there, you need to store it somehow. If you have a small amount of crypto, and small is relative, right? For some people, small is $1 million worth of crypto. For some people, small is $5. But let's say you have under $1,000, you probably just will keep it on an exchange. Like let's say you buy on Coinbase, you'll just buy it and keep it there. But if you start owning $20,000, $50,000, you might want to take it off of exchanges. You can just send it. There's a way to send cryptocurrency, and you might want to put it in a hot wallet or a cold wallet. Those are two different ways of storing cryptocurrency. We're not going to go into it in this video. I do have a full playlist on Treasure, which is a cold storage wallet. Go watch that if you're interested in that. But it's just a safer way of keeping your cryptocurrency. Sometimes these exchanges go bankrupt. Coinbase hasn't gone bankrupt, but sometimes exchanges do go bankrupt. And then if you have cryptocurrency on there, it's a pretty lengthy process to get it paid out to you if they have cryptocurrency left to pay you at all. So it's a little bit more advanced, but I would withdraw it from exchanges once you have a significant amount. And then when should you sell? Depends on you. It depends on your situation. Maybe you want to hold because you see all these institutions continuously buying. You know that the peak is about 2 years away. So maybe you want to sell in there. Maybe you just want to hold on forever. Maybe you never want to sell any of it. One other way that you can actually buy through these ETFs. So you can go into your brokerage account and type in IBIT or the ticker symbol of any of these other ETFs that we talked about earlier. And then you can just buy the ETF, which is even easier than setting up a Coinbase account or something like that. So another way to buy, just know that you don't actually have the ability to send out your own cryptocurrency. Some people don't like that. Some people want to hold it themselves because then you can actually send it places. You actually control it yourself. So that's something to consider too. I'm going to rapid fire through some other common pitfalls in cryptocurrency. When you buy cryptocurrency, you might see that some other cryptocurrency is moving up more than your cryptocurrency. Let's say you buy Solana and then you look at CoinMarketCap and there could be some other cryptocurrency, Bitcoin or Ethereum or something that's going up faster. And a lot of people, when they start getting interested in cryptocurrency, they chase the pumps. So they see that some cryptocurrency is going up a lot and they'll sell the cryptocurrencies that they have and then they'll go buy that other cryptocurrency. They don't always move at the same time though. So one might pump up and then the other one pumps up and then this one pumps up back and forth. And then if you just go to the one that's already pumped, then you miss out when your cryptocurrency actually moves up. So just be careful. Make sure you actually know what you're buying. Make sure you understand the mechanics of it. Start with a small amount of buying so that you can get comfortable with it. Here are a couple other mistakes that are really common. First of all, a lot of people look at the price of crypto when they're trying to compare different cryptos. And that's kind of natural. If you're looking at a new car, you look at the price of the car because that's all you have to look at to understand how much it costs. But for cryptocurrencies and for stocks, it's not exactly the same thing. It's like buying part of a business. If you don't know how much of the business you actually own, it's really hard to determine how much you should pay for it. Let's say you buy $100 of some business, XYZ business, but they never tell you how much of the company you own for that $100. That doesn't really help you understand the value you're getting. It would be like buying a pizza, but you don't know how big the pizza is. You just have to pay $20 and then they say that they'll deliver some sized pizza to you. Like you don't know what kind of value you're getting. That is like the same thing as looking at just the price. Because different cryptocurrencies can have different circulating supplies, which is the amount of tokens out there. For example, Bitcoin is $52,000 in terms of price. There are 19,632,156 Bitcoin. Look at something else that's cheaper. Let's say XRP. XRP is 56 cents, but there are 54 billion tokens out there. So when you're comparing different cryptocurrencies, what you really want to look at is the market cap. You don't want to look at the price because it's really hard to compare because they all have different amount of tokens. So you want to look at the market caps when you're comparing. But if you want to look at one specific cryptocurrency over time, let's say you want to look at Bitcoin and you're looking at Bitcoin last cycle versus this cycle, that's where you might look at price specifically. If you're just keeping within the same cryptocurrency, look at price. If you're comparing against different cryptocurrencies, look at market cap. Another thing is you typically don't want to buy at all-time highs. Like sometimes a lot of people are just going to see this when Bitcoin's already above 69,000, which means that it's higher than it ever has been in the past. Back in 2021 or 2022, 2021, we hit $69,000. But some people are just going to get stuck buying ahead of it or above that price. Now, a lot of people will buy at the very top because a lot of people hear from their significant others or maybe their friends or cousins or something that they should get into cryptocurrency, how much money they're making, and you just kind of shrug it off. And then you hear about it again. Oh, Jimmy from down the street made $50,000 buying whatever cryptocurrency. And then you keep on hearing about it, and eventually you decide that you want to buy. And that oftentimes is the peak of the market. Something that is kind of an interesting thing that I've heard about crypto, which I think is very true, is most people, like 90% plus of people, don't make money their first cycle in crypto. They actually lose money because you put in more. As the price goes up, you put in more and more, you get more and more bullish. I was doing the same thing the first time that I was in crypto. You put in more and more and more, and then there's the top of the cycle. You start falling down. You think, oh, now I'm getting even cheaper prices. I'm going to put in more and more money. And then we keep on falling down, keep on falling down, keep on falling down. So you actually lose money. Compared to people that were here early, maybe they were here back in 2023, 2022. They bought Bitcoin at $16,000, $20,000. Those people are me. I did that, and I will be selling during the next bull market. I will be selling when new people come into the market, and that is just a benefit of getting here early. You get Bitcoin at the price you deserve, and I deserved it at $17,000. I was accumulating. I was not too scared. When other people had heard about Bitcoin and just saw those crashing and that it was going sideways and people were so scared, I was out there risking the money, putting it into Bitcoin, and now it's up a lot. So make sure that you don't buy when everyone is talking about Bitcoin, when everyone's excited about Bitcoin. Another good thing to look at are views. Watch my channel. If I start getting 50 to 100,000 views a video, you probably want to be taking profits on Bitcoin and not buying. And that's hard. That's hard because you might be looking at Bitcoin when it's at 200,000, and who knows, it could go up to 400,000. Just know that it gets exponentially riskier the more we're above the all-time high. That doesn't necessarily mean that it's a bad time to be buying Bitcoin. I can't see the future. People are going to ask me when Bitcoin's over 100,000, I just saw Bitcoin, should I buy now? And I'm going to say exactly this. If you don't have an allocation to Bitcoin, maybe you want to start adding small amounts. Maybe you want to start dollar cost averaging. I'm not going to say put everything in Bitcoin because now's the best time to do it. No, I'm not trying to say that because that is not smart, sound advice. Maybe you want to start dollar cost averaging at that point though. Also, make sure that you don't put in more money than you can afford to lose. If you have to use money next month or 6 months from now to buy a house or a car or pay for medical expenses, or if you're looking to make a quick buck and then reinvest it somewhere else, don't do it. You're probably going to end up losing money. And part of it too is even if the numbers work out where you might make money over the next 3 months, there's going to be volatility. So let's say you put $5,000 into Bitcoin. It could go down to 4,000 and you panic and sell. And then we go right back up to new highs and you missed out on money. Your emotions can cloud your judgment. So don't put in money that you can't afford to lose and that you don't have a significant amount of time to keep in cryptocurrency. Also, make sure when you start sending crypto that you really understand how to send crypto. It's probably past where we're going to talk about in this video, but just know that if you send your crypto, you can't get it back most of the time. So if you send it to the wrong wallet address, if you get scammed, there are scammers literally in the comments section. There are people that pose as me on different social media that say that they're me and say that you should invest with them. They want to help you with your trading. That's not me. There are so many scammers out there. I literally can't even go and delete all of them underneath the comment section. It takes literally hours to delete all the comments and they're just infinite. So honestly, there's not much of a point. It's something that YouTube has to fix because they can do it much easier than I can do it. I don't have anyone on my team with me. It's just me. I do everything. So I have to go delete those and there's just too many of them. They spam, and there are also going to be live streams on YouTube that say that they can double your money. Send your crypto there because they're doing some giveaway and they'll double it. No, they're just going to keep your crypto and never pay you a dime. There are also people that will say that your Coinbase was hacked and they need you to send them the code. That's fake too. I know people that have been in crypto for 5 years plus that get scammed out of their crypto. So don't be that person. You can go, if you don't trust yourself, you can go buy a Bitcoin ETF and it might be much simpler for you and safer. Another thing is there's just no such thing as a free lunch. Just to be clear, I heard that in economics in high school. That's how it is in crypto. No one's going to give you anything for free. Sometimes there are airdrops. If you've used something, sometimes there are airdrops, but A lot of the time, there are scams saying that you got an airdrop and you don't actually get an airdrop. And to be clear, you can search what an airdrop is. A big thing too is just not controlling your emotions. Like, you're going to feel more emotions in crypto than you ever have felt in anything else because there's so much volatility. You're going to feel hope. You're going to feel optimism. You're going to go up to euphoria. This is the psychology of a market cycle. You're going to feel like you're a genius, like you could put in your entire life savings and you can double it. You can get a house much nicer than the one you have right now. You can finally do this or that, and then we're going to dump, and then you're going to get angry and depressed. Just know you should typically do the opposite of whatever you feel. If you feel euphoria, like you should dump a lot of money into the market, if you feel like you should be buying crypto hand over fist, you probably should be selling. Same thing if you're thrilled. If you're posting about how much money you're making, you probably should take profits. Now, this isn't always the case because sometimes, if you had bought at 16,000, you might be euphoric at 32,000 on Bitcoin. But this is where you have to look at this in addition to where we are in the market. And then when you're angry, when you feel like Bitcoin might be dead or that it's never coming back, that's typically when you want to be buying. So just basically do the opposite of what you want to do, and that's usually a good thing. And then also another common mistake is that some people just don't file taxes for crypto or don't talk about their crypto gains. I've seen multiple countries crack down because they want tax revenue. We know that they're at a major deficit. They want to make sure that you're paying taxes. So if you make money short term, you better report that. If you make money long term, you better report that. And this isn't like a brokerage account. Companies aren't going to send you at the end of the year, unless it's literally like Coinbase. A lot of these wallets and a lot of these things that you might use don't send your tax information to you. It's kind of on you to do it. And a lot of these do have fees. Like if you want to send crypto somewhere, it charges you a fee. Depending on what crypto you use, it can be anywhere from a fraction of a penny up to $10, $50. A lot of people don't record that, and you can actually write those off on your taxes. Like I've talked to people that thought they made $5,000 and they actually lost about $10,000, and they would have reported that wrong on their taxes. I created this business with someone else. It's called BCM. There's a link to it underneath the video. They actually goes through your wallets by hand and looks at every single transaction, tallies it up, gives it to you so that you can give it to your accountant. So if you want to check that out, there's a link underneath the video. You can set up a consultation with us as well to talk about the process, and then we can get you all set. So there's some other links underneath the video as well. Like I said earlier, to HGAlgo in case you want someone to help you know when to dollar cost average into the market or trade as well. There's also a link down there to Margex in case you want to trade more short term, if you want to use leverage. There's also a link down there to my Patreon where I tell you what I'm doing in the market, when I'm buying, when I'm selling. So definitely check out those links. Thank you so much. I appreciate it. Hit subscribe if you want to see future videos like this. Also, let me know if you're still around. Maybe give me a little fire emoji, or if you can't give emojis, just say fire or something like that. I appreciate you so much for watching. Congrats, you've stuck through a very long video that is packed with a lot of information. If you want to see more videos like this, you can hit subscribe. Most of them are shorter and they're more news-based, but if you have specific questions, you can leave them in the comments section. I might do a follow-up video to this. Thank you so much. I'll see you in the next video. Bye.